Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. SpaceX valuation takes off as the stock soars for a third day. We discuss how it's also stress testing crypto's bid to reinvent stocks.
SpaceX drawing attention to the private sector, too. We talk exclusively to Shahmir Khaliq of Citi about the firm's move to offer trading of private companies.
And Binance is making preparations to stop providing services in the European Union. We tell you why.
That's all ahead on this hour of Bloomberg Crypto. First, though, just a check of where things stand today. We actually see most of these crypto assets lower today, most digital assets. Bitcoin's down about 1% today, just shy of 66,000. Ether down about 1.9%. Binance Coin, Solana, both down about 2%. Yesterday, though, that's what I want to focus on, Scarlett. Bitcoin climbed to its highest level in close to 2 weeks. This after the U.S. and Iran said they had reached an agreement to end hostilities and reopen the Strait of Hormuz. We saw a risk-on rally yesterday, and we actually saw that hit Bitcoin. It did rise more than 5%, more than 67,250 on Monday. Still down, though, close to 50% from those all-time highs reached back in October, so not partaking totally in the rally that we've seen with risk assets.
Well said. We're also keeping an eye on Michael Saylor's strategy, which is, of course, the biggest corporate holder of Bitcoin. The company says it spent $100 million from June 8th to the 14th to buy more than 1,500 Bitcoin tokens to increase its Bitcoin reserve to more than 846,000. Now, the timing here is notable because about 2 weeks ago, Strategy disclosed it sold 32 Bitcoin tokens in late May. That was the first sale since 2022. The amount there was negligible, but the symbolism was significant, and that news contributed to Bitcoin's sell-off below $60,000, Tim.
Okay, we're keeping track of it so everybody else doesn't have to. But not everyone is piling into Bitcoin at this price level. On ETF IQ this week, we spoke to BlackRock's Rick Reeder about his exposure and outlook.
I think it's ultimately going higher. We're keeping it a pretty moderate exposure, and I felt like it's just okay today, and so we've reduced exposure. Ultimately, I think it's going higher.
Rick Reeder at BlackRock here to report on crypto corporate stories is Bloomberg's Monique Malema, who comes to us from Toronto. So I want to start with strategy. Scarlett just went through the numbers here. Is it fair to say we're getting sort of mixed messages, Monique, from what strategy is doing when it comes to buying and selling Bitcoin?
I think it is a bit of a mixed bag right now. We did see that one Bitcoin set of Bitcoin sales, like you mentioned, 2 weeks ago, but they now for the past 2 weeks have been buying more Bitcoin. Their purchases this week were funded by at-the-market share sales, which is something they had been moving away from a little bit to focus more on some of their credit instruments because those have less dilution compared to their share sales. But some analysts say that they expect Strategy to continue to buy more Bitcoin, but they think this is largely going to have to be funded with that credit instrument and also with the need then to pay dividend on that as well. And this could also mean that there'll be less Bitcoin per share going forward.
Okay, thank you for putting that into perspective for us. In Michael Saylor's post on X, he also said that they've increased the U.S. dollar reserve, USD reserve, by $100 million to $1.1 billion. What does that mean in the context of resuming buying Bitcoin again?
So this is something Strategy has really been focusing on because this reserve is going to be used to fund their dividends. With some of these credit instruments that they've been issuing, they have to provide dividends to those holders. And the only way to fund that is going to be through these reserves for the most part if they don't want to do Bitcoin sales because the company's core business doesn't generate a lot of net income. So they need to be able to get those funds from somewhere else. And what they're trying to do is build up those reserves so that when there is a bit of a downturn in Bitcoin, potentially in the future, that they don't have to return to doing as many Bitcoin sales.
Hey, I want to switch gears a little bit, Monique, and just talk about Robinhood. Shares were higher. Now they're lower by about 2.6%, cutting its workforce by 10%. Just the latest, let's call it fintech, after Block and others to cut some jobs in the last few months. Block, for its part, blamed it on AI. Is that the narrative we're hearing from Robinhood today?
No. So Robinhood is trying to differentiate themselves from some of these other layoffs that we've seen, like you said, in the fintech and in the crypto space. They say this is more streamlining, that they want to have a high performance culture. So they're saying that this is going to be about growth. There is going to be about a $20 million charge that they're going to take from doing these reductions, but they expect to see some growth going forward from having lower costs. And that's what analysts are saying as well. They think this is, in the long run, going to help with some of that earnings growth, even if there is a bit of pain right now.
What types of roles are being cut, being eliminated here, Monique?
So they're only eliminating their full-time roles. So these are going to be mostly corporate positions. It's going to be a couple hundred of those positions. And like they've said that it's focusing more on performance rather than, like you had mentioned, some of these AI replacement things that we've heard from some of the other firms.
All right, Monique, thank you so much for joining us. Monique Molima joining us from Toronto. Really appreciate it. Meantime, of course, we're keeping an eye on SpaceX, and the shares are jumping in today's session, putting its valuation right above 2.7 trillion.
I like that instead of showing the share price, we just show the valuation because it's just so massive.
It's so
today.
eye-popping,
yeah,
right?
Yeah, it's eye-popping.
Well, so at this valuation, it would overtake Amazon to become the 5th largest publicly traded company in the world in its 3rd day of trading. This is where it stands in regular trading. Now, if you looked at perpetual futures trading, which allowed traders to speculate on a stock's price around the clock, its valuation to $3 trillion is what you see on blockchain-based markets. Bloomberg's crypto and DeFi reporter Muyao Shen has been following this, and she joins us now. So Muyao, the SpaceX IPO has been said to be a really important moment for the crypto market. Why is that?
That's because this is the first real-world test yet to really see if crypto market can really create like this market where people can access a private company's share before it hits the Wall Street.
And is it working?
I think it depends on where you're
looking. It feels like it's been
at.
a mixed bag.
Yeah, if you look at perpetual swaps, as Scarlett said earlier, it shows there's real demand, right? On Hyperliquid, for example, on the listing day, there was over $1 billion traded on the SpaceX contract. It was second biggest contract on the day just after Bitcoin.
And it felt like it foreshadowed the price action on Friday a little bit.
Yes, exactly. I think that's why people are now really treating platforms like Hyperliquid and Binance as this price discovery area for SpaceX, especially when the regular markets are closed.
Okay, so it definitely played a role in the lead up to the IPO. Now that SpaceX is publicly traded and available to everyone, what does its IPO tell us about tokenization? Because that's the other trend that we've been seeing, this move towards tokenizing every potential asset.
Yeah, I think that's also where the problem happens because people think about tokenization, you put the assets on chain, but in reality, what happened on Friday was that a couple exchanges, also wallets, on the crypto side, they were unable to deliver the underlying shares to their users. I think that was a big hit for the crypto industry because I think for the past few years, they have been very bullish about the whole idea of tokenization, and they want to keep their users on their platform without going anywhere else.
What about the distinction between tokenized spot shares versus perpetual futures, and why perpetual futures seem to be getting a lot of the attention?
Yeah, I think that's because buying perpetual swap doesn't require having the underlying shares. So you're basically just speculating the underlying prices. But tokenized stocks, you actually need to have the underlying shares. So that requires some sort of work between the brokers and the crypto platforms and blockchain technology.
One is synthetic, essentially, and the other one isn't, right?
Yes. Mm-hmm.
Ah, okay. Muyao, thank you so much for keeping an eye on all this. Muyao Shen, one of our crypto and DeFi reporters here for Bloomberg News.
Coming up next, in our token moment, Citi is launching its blockchain-enabled depository receipts on shares. We're going to speak to Shahmir Khaliq, head of services over at Citi, on what that means for private markets. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
It's time for a token moment where we look at the efforts to tokenize different parts of the market. A new initiative by Citi will allow its wealthy and institutional clients to trade tokenized shares of private companies on a blockchain. Here for more on that is Shahmir Khaliq joining us from Citi. Shahmir, great to speak with you. Traditionally, wealthy investors have typically gotten access to these types of companies via allocations to alternatives. So to get us started, how is what you're offering different?
Yeah, first of all, Scarlett and Tim, thank you so much for having me. And by the way, greetings from Zurich. So I'm right here where the inaugural event has happened, which is in partnership with SIX, the digital Swiss centralized securities depository. So how's this different? So in the past, as you probably talked about, investors have gotten access to private markets, but generally when they've gotten that access, it's been relatively illiquid. Price transparency and price discovery has potentially been a bit of an issue. And so what we're trying to do here is use our market-leading depository receipts capability, coupled with our market-leading custodial presence, and basically bring them together along with our markets distribution and our wealth capabilities, and offer clients the ability to invest in pre-IPO private shares on chain, and allows them to get access to a private asset in a regulated structure.
Would it, and to Scarlett's question about this being typically available to wealthier clients via alternatives and secondaries that would be a portion of a client's portfolio, would clients then be able to trade this product or these assets, or you trade on their behalf, the same way that you trade any other stock?
That's exactly right. And I think, as I mentioned, this would be an asset that would be quoted as part of the regular cap table for the client. And it would basically look like, for the investor side, it would be part of their portfolio reporting, and then be able to trade them through SIX as the holder, as the securities depository.
How do you know there's enough liquidity there to actually have this mark to market every day and as actively traded as something that is available to a wider group of people? If it's just available to this smaller group and it's on chain for Citi's clients, then how is it actually priced accurately?
Yeah, so great question. So I think we're the first to market with this, Tim, at this point of time. And we've put this out there to really go on a voyage of discovery and actually give companies access to that capital, and actually give investors access to these securities as well. So as we build out momentum on this, as I said, first to market, we're expecting more and more companies to actually ask us. We've got a lot of incomings from our clients already, and really allow them the access to those markets and hopefully build momentum on this product over time.
So to Tim's point about liquidity, right now this service is only available to foreign investors. What needs to happen before it becomes available to U.S. investors?
Yeah, so I think it depends on the type of issue. I do expect us to really, as we're thinking about the various companies and various disclosure rules, we do expect it to take this to the U.S. market as well in the very near future.
Would those only be available to so-called accredited investors?
That would be available to both wealth and institutional investors.
Okay, that makes sense. When does this move beyond tokenizing your own investments? Because as we saw in the Wall Street Journal piece, a tokenization, the transaction was with Kaleido, this tokenization and digital asset platform that is a Citi portfolio company. What do you need in terms of like buy-in from companies that are not Citi portfolio companies to make sure this works for them?
Yeah, I think Citi Portfolio Company was just the first company that we spoke to, because we were, as you can appreciate, we're an investor in this company. We are also the provider of the depository receipt structure. We are the custodian in this company. We also used our markets platform on the secondary side from a distribution standpoint. And then for our wealth clients as well, we gave this access to them. So as you can think about the entire Citi construct, we pretty much hit every business line across the way. So as I talked about earlier, my expectation is that we are going to get a lot more incomings from companies that are not Citi portfolio companies, and our ability to help them should absolutely be there. We should be helping them raise capital and effectively providing them through this regulated digital infrastructure, be providing them another access to capital as an entry point for the investor community.
So, Shahmir, Robinhood tried tokenizing private shares last year, but issuers like SpaceX pushed back hard. Your model needs issuers to authorize Citi to offer their shares. So how do you convince a pre-IPO SpaceX or other unicorn to let you create that secondary liquidity when Elon Musk, the founders, spent a lot of time, a lot of energy trying to control their cap table?
Yeah. So the way I would think about it is, first and foremost, as you've seen with Kaleido, we had full C-suite engagement with the Kaleido team. And we went at this with the full help and backing of the Kaleido team. So I think you're going to get different investors with different perspectives. But for the investors, for the companies that are looking for access to those investors, I think this is a great entry point from a digital standpoint, and actually helps us build out and spec out the capabilities of this platform for the future as well. So I do expect different outcomes.
Do you need any regulatory approval here in the U.S. to make this happen? Like, what's a timeline for when this happens in the U.S.?
I would expect there to be a 6 to 12 month timeline.
Okay.
And it's about disclosure rules and how we make this thing happen.
But no regulatory approval or anything. This is all on Citi's end, making it work here in the U.S.?
It's actually regulatory approval coupled with a company's need and coupled with the right relevant approvals for us to be able to market to U.S. institutional investors as well, to your U.S. point.
What's the significance of this particular service to Citi's overall digital asset strategy?
Yeah, so we've been very focused on the digital side, basically thinking about 24/7 across the board to say, as we think about payments, liquidity, tokenization of securities, and the underlying settlement of custodial securities, collateral posting as well. So we've been really focused on really moving that entire value chain on-chain, so to speak, and making sure that we're not just upgrading our conventional rails, but also investing in blockchain-based rails and then connecting them as well. So banking, what I would call the pure digital universe, we've been on the road and in process of banking some of the coin companies as well. We're also connecting their infrastructure with our conventional infrastructure, allowing for on-off ramps to happen. Plus, obviously, we've been investing to do reserve management for those companies as well. So I would say this is part of the bigger digital asset story that we've laid out for the market, where we think there is considerable potential for Citi to continue to play a leading role like we've done in the past.
Shahmir Khaliq with Citi joining us from Zurich. Shahmir, we appreciate you taking the time and joining us today. Coming up later in the hour, we're going to sit down with BlackRock's Robbie Mitchnick to discuss their launch of a new Bitcoin ETF. That fund soaring in today's trading. That's coming up in just a few minutes when Robbie Mitchnick joins us. Before that, though, we're talking to Dee over at Bloomberg Intelligence. That's next on Bloomberg.
We know him by Dee.
I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are pulling back, with tech weighing heavy on major indexes after a rally that pushed benchmarks to the brink of all-time highs. Meanwhile, oil is extending its decline, with Brent crude slipping below $80 a barrel for the first time in more than 3 months, as traders continue to digest the U.S.-Iran agreement to reopen the Strait of Hormuz. And finally, SpaceX is extending its post-IPO surge and closing in on Microsoft after overtaking Amazon in market value. The company also finalized a $60 billion deal to acquire coding startup Cursor. Those are your midday movers. I'm Nora Melinda.
The SEC is proposing to rescind key market structure rules. Commissioner Paul Atkins writing on Thursday, quote, "After 2 decades of Rule 611, it is high time that the Commission review its unintended consequences that have hindered rather than enhanced the growth of long-term markets." Bloomberg Intelligence senior analyst for crypto and digital assets, Dushan Sharawat, has been covering this. He joins us now. Whenever we have you on, we know you're going to translate something that is pretty complicated when it comes to the plumbing and the regulations and market structure. Why are we so focused on Reg NMS and what's happening here?
Sure, Tim and Scarlett, thank you for having me again. So Regulation National Market System was passed in 2005. I remember when it happened. So for over 20 years, Reg NMS has been the constitution under which U.S. capital markets and particularly trading has happened. And within that, Rule 611 basically is a rule that is called the Order Protection Rule, that basically says that any trade that's done on any U.S. equity has to be done to the national bid and ask offer. So basically it means, very simply, using a, thought about it, what would be a simple analogy? So imagine if you go to a stock market, to go to a supermarket, you want to buy a product. The supermarket has to first check what's the best price of that product on all supermarkets across the country, and cannot offer that at an inferior price. So that's the kind of idea, right? And that's what we've operated the last 25 years. And it's actually worked pretty well. Now the markets are very liquid. We've called the best environment possible for U.S. investors. So Chairman Atkins has decided that it's probably the right time to rethink and rescind Rule 611, which in my case, I cover crypto, would have major implications for crypto and tokenized assets, because Rule 611 could be a major stumbling block for the way that DeFi and tokenized securities operate.
All right, let's talk about tokenized assets. Tokenized equities, there's been a lot of talk. We talk about it constantly here on Bloomberg Crypto, and there is some progress that we're seeing there. But there's still some obstacles that stand in the way to tokenized equities being a real thing, a mainstream thing. What are those?
Sure, Scarlett. So The biggest issue, of course, for tokenized assets and DeFi securities is actually this Rule 611. Within that, it's called the NBBO, National Bid Ask Offer. So if that gets rescinded, that's a major impetus. Having said that, there are a number of other obstacles. Three that I'll mention is one is around corporate actions, one is around custody, and one is around securities title. The big picture here is that technology, as we've seen in so many other aspects of our business lives, is moving much faster than our laws can actually accommodate. That's basically the bottom line. So if you take custody, for example, for 50 years, we've got custody rules to protect investor assets, that you can have your money with BlackRock, but actually the money is custodied at State Street. In the decentralized finance space, you're basically looking at collapsing all the intermediaries. So you do not need the number of intermediaries that we have in traditional finance. That cleared out model with few intermediaries is incompatible with things like custodial rules. So custody has to catch up with that, so is with corporate actions. That's basically the big picture here.
Dee, you're here in New York City, usually based in Boston. We always love it when you come to New York. The reason you're here today is because the Bloomberg Market Structure Conference this afternoon, more than 500 people are registered for this event. Is this the hot topic? Is this what you're talking about? Tokenization, the regulatory environment? Is this what you're covering?
Actually, the hot topic today, the theme of today's event is around the importance of the retail investor having driven the market for the last 10 years. So even more than that, in fact, when you think about tokenization, crypto prediction markets, it's driven by the retail investors. So actually, our theme of our conference today is the major influence of the retail investor, whether it's driving US equity volume, crypto markets, 24/7 prediction markets. That's the theme of our conference. But of course, we'll be talking about market structure and tokenization as well.
So the innovation that we're seeing is all catered to getting more retail participation?
It's actually in response to, it's not like we want necessarily retail participation. We just want to catch up.
It's already
and create
happening.
A protective environment for retail investors to operate.
All right, Dushyant Sharawat with Bloomberg Intelligence. Again, today's Market Structure Conference happening here at Bloomberg headquarters. It's going to be pretty awesome. And again, always a pleasure when Dee joins us here on set. Check out his research and the entire team's research on the Bloomberg terminal. Coming up next, the World Cup gotten off to a hot start, not only for Team USA, but also for prediction markets. We got the details ahead. This is Bloomberg.
Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenovic.
The World Cup expected to be the biggest sporting event on the planet. It might already be adding to the rapid growth of prediction markets. According to Dune Analytics, Kalshi just reached a new weekly record, nearing $6 billion in notional trading volume as the tournament got started. And that brings us to the odds, an in-depth look at prediction markets. Bloomberg reporter Elmi Nicole has been covering Kalshi extensively. She joins us live from London. It's notable that we talk about Kalshi because you have a great profile out about one of Kalshi's co-founders, MIT background. She's from Brazil. She's a former ballerina. Tell us all about Luana Lopez Lara.
So Luana is one of the co-founders of Kalshi. She's 30 years old, and already she's worth $2.6 billion after Kalshi raised quite a significant sum of money in the last year. And that's just one of her accolades, right? She's also the chief operating officer of the company. She's a former ballerina, and they started Kalshi a few years ago, took on the CFTC to be able to offer event contracts, and are now the largest US regulated provider of prediction markets. There's also Polymarket, another big rival. That's offshore for now, but it does have a US app. And that's really how the prediction market space is playing out at the minute. We do have some sports books coming into the fray. Providers like Robinhood are also seeking to provide contracts as well. So we're really seeing it grow and blossom, but Kalshi and Polymarket are the front runners.
Okay, so Emily, the story is a great one, and what got my attention was the mention of Kylie Jenner.
I knew that.
Because I like following celebrity news, but also, Emily, what happened with Kylie Jenner that kind of gave Luana Lopez Lara the inspiration for prediction markets? What was it about Kylie Jenner that kind of got her creative juices going?
So back in early 2018, it was when Luana and her co-founder Tarek Mansour were both interns at Citadel. Luana was thinking about, and at Five Ring, sorry. Luana was thinking about where or not they could evolve kind of the ways in which they could trade on certain topics. They were thinking about market making, doing training exercises while at both of the hedge funds. And at 5 Rings is where Luana was thinking about what was going on with Kylie Jenner, because at the time, Kylie Jenner was rumored to be pregnant. That's a thing that actually turned out to be true. Jenner kept her pregnancy secret for the full 9 months until she gave birth. And Luana was thinking, well, I would love to place a bet on this, but there was nowhere to do so. Another intern actually said to Luana, well, there's really nowhere for this to happen. And that was one of the things that inspired them to create Kalshi later on that year.
It's funny because a lot of the attention that these platforms get, Polymarket included, has to do with sort of these whisper markets or these events that aren't traditional things you can bet on, like the pregnancy of a celebrity or whether a celebrity will show up at a certain game, for example. But at the end of the day, so much of what happens on the platform is still sports betting, right?
Yeah, I think at the last count, it was about 80% of Kalshi's volume is sports betting. And with the World Cup and Knicks games last week, that is only going to be rising, I can imagine, because it's driving just so much volume. As you said at the beginning of this, Kalshi hit a new weekly record last week with $5.1 billion in trading volume. So we're really seeing World Cup bets power them to new records, and especially with Knicks in 5, that really fostered a lot more. Kalshi itself has sponsored, for example, part of the Madison Square Garden where the Knicks was playing last week. So we're really seeing the two of them integrate a lot in that as well.
I think about Kalshi and how Tarek Mansour has really kind of become the public face of the company, but Luana is the co-founder and she's also the COO. Just give us a sense of her responsibilities at the firm.
Right, so as you say, yeah, Tarek is the CEO, so he's the one who kind of does all the public-facing stuff, but Luana's the one that's controlling things behind the scenes. She oversees business areas like market listings, design, engineering. These are all kind of the day-to-day operations that keep the company running, and she's very hands-on in that. What she was telling me is that, she's having meetings every week with different teams, doing deep dives into what they should focus on next. She's also a big focus of their legal strategy, so Kalshi is currently fighting quite a number of lawsuits across the US where states are challenging its ability to offer sports betting in those areas, and they have to meet with their legal team every week to decide, which case are we focusing on, what's our strategy here, and she's a big part of that as well.
You wrote this profile of Lopez Lara, but you also have a story out that came out around the same time about something that nobody outside of Kalshi really knew about, and it's this AI agent Harrison that's being used inside the company right now. What is Harrison doing that people used to do? What kind of work can it do? What kind of work will it be able to do?
So the way in which prediction markets operate, if you think about them as event contracts, they're always having to look for if the news is breaking that decides that an event has finished, because you can be trading for ages on, if Taylor Swift's going to be pregnant or if, so-and-so is going to win a sports game, but you need to be notified when that thing actually happens. So what Harrison does is it continually is looking through the news, through social media, seeing if there's any markets that need determination and notifying people at Kalshi that needs to happen. That's on the determination side. And then on the resolution side, it also kind of helps people decide, like if one person puts in an answer saying this is how it should resolve, another person does the same, Harrison can check that those answers match. This is an area that's really important for prediction markets because we've seen quite a few times where if rules for a market aren't clear enough, if there's gray area, it can really lead into issues with traders not getting paid out the way that they think they should. And so having another service to kind of backstop that is really interesting, and it's a good way of using AI in this case.
Is Harrison backstopping, or is it kind of going through the first layer and looking for areas that a human would need to come in and intervene?
It does both. So in one way, it kind of is helping to backstop. But like I said, you've got two people submitting a possible suggestion and Harrison is checking that those answers match. But it also can make its own suggestions to how it think a market should resolve. And ideally, you'd want all three of those answers to match as well. And in areas where the topic might be particularly contentious, say like a Supreme Court ruling, Kalshi may also involve its chief regulatory officer to help weigh in on that matter too.
All right, Emily, thank you so much. Emily Nicole joining us from London. She's one of our Bloomberg Crypto reporters there with a fantastic profile here on the co-founder of Kalshi, Luana Lopez Lara, who, Tim, you have met before.
Yeah, I mean, this is how good I am at seeing the future. And that's totally sarcastic and facetious because when the day Kalshi launched, you and I hosted a different show.
Yes.
This was, 2020, 2021. She came into the Bloomberg office. It was like the height of the pandemic, interviewed her about this new concept. Bloomberg Business Week actually had a great story about it when it launched. And I had no idea that this would become, a company that was worth tens of billions of dollars. She would become the youngest female self-made billionaire out there. Yeah.
Look at
anyway,
you, talking to the people before they get big.
Look at me. I knew them when. Exactly. Well, coming up next, BlackRock's Robbie Mitchnick is here. He's going to talk about the launch of a new Bitcoin ETF. The fund is soaring in today's trading. That's next on Bloomberg Crypto.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are retreating after a strong run that brought the major indexes within striking distance of record highs, with weakness in tech leading today's pullback. Meanwhile, oil is falling, with Brent crude dropping below $80 a barrel for the first time in more than 3 months, as traders continue to assess the U.S.-Iran deal to reopen the Strait of Hormuz. And in corporate news, Yum Brands is moving higher after announcing the $2.7 billion sale of Pizza Hut, a move that allows the company to double down on its faster-growing KFC and Taco Bell businesses while shedding a brand that has lagged competitors in recent years. And finally, Ripple has acquired an equity stake in Flutterwave, boosting the African fintech's valuation to over $3 billion. The companies say the partnership is aimed at expanding payments infrastructure and making cross-border money transfers faster and more efficient. Those are your midday movers. I'm Nora Melinda.
This is Bloomberg Crypto. Now, today, BlackRock launched a new ETF, the iShares Bitcoin Premium Income ETF. The ticker is BITA, or for those in the know, BITA. The fund generates income using a covered call strategy and ties to its main Bitcoin ETF, IBIT. Here with more is BlackRock Global Head of Digital Assets, Robbie Mitchnick. Thank you so much for joining us, and forgive us for sounding a little bit like ETF IQ here. We're going to try to keep it focused on the crypto part of it.
I would appreciate that.
Okay. So BITA launches today. It's a Bitcoin income fund, and what you're targeting is anywhere from 15 to 20% annual yield while capturing 70% of Bitcoin's upside. So my question to you is, if investors wanted Bitcoin, they could buy IBIT. If they wanted income, they could get any of BlackRock's fixed income ETFs. What kind of investor is BITA built for?
Yeah, it's a great question, Scarlett. Tim, good to see you. It really, we think, will span a number of investor types. We've heard often through our journey and through IBIT's tremendous success that a lot of our clients actually, the absence of an intrinsic yield in Bitcoin is something that has caused them to not allocate thus far. So we think with this product, the ability to have, roughly target 70% upside retention in Bitcoin plus, let's call it high teens yield target, is going to be really attractive. Think about financial advisors who maybe are more income focused for their clients, maybe a little bit more conservative. Think about some institutions for whom yield targets are really important. We think this will resonate there, as it will, of course, with end investors too.
There's certainly interest today. It's up 230% in the first day of trading. So
you can't trust those first day ticker prices. Sometimes can be a little.
Want to make sure.
Yeah.
I'm curious about the. Scarlett asked about who it's for. You think interest is certainly going to be broad. I'm just wondering how it works, how you communicate how this works to a population that includes people who might not understand the mechanics of what happens sort of under the wrapper.
Right. So what you're doing is basically monetizing the fact that Bitcoin is a volatile asset. The more volatile an asset, the more valuable options on it are worth. So holding Bitcoin or IBIT as an underlier in the fund and then being able to write call options, to sell call options, to generate yield. And so the trade is you're giving up part of the upside in exchange for being able to capture that yield. So you can think of it as that sort of 70-ish% target on the upside preservation and getting high teens-ish yield. So if Bitcoin goes down, we would expect BITA to outperform. If Bitcoin's flat, we'd expect BITA to outperform. If Bitcoin's up marginally, we'd expect BITA to outperform. If Bitcoin's up a lot, that's where we'd expect BITA to underperform. And that's the trade they're making.
Okay.
So as BITA writes options on IBIT, BlackRock's spot Bitcoin ETF, this means that your firm, BlackRock, is building a derivative product on top of its own underlying fund, IBIT. So you're both the manufacturer of the asset as well as providing the options overlay. That's a lot of involvement from BlackRock there. Should investors care that the house is writing options on the house's own fund?
I think it's very natural. IBIT is by far the largest Bitcoin exchange traded product today, and IBIT options actually are the dominant options vehicle through which this market is expressed. So IBIT options actually are deeper and more liquid than even Bitcoin options themselves. So it's natural that these form the building blocks of the product we've built.
We're in the midst of a crypto winter, I think many would argue, especially when it comes to Bitcoin. Down still roughly 50% from those all-time highs. Does that make this environment actually more attractive for launching this product?
In some ways, yes. And we've seen, through the cycles that the demand and interest from clients has been quite steady. Clearly, when Bitcoin's going up, it's even stronger. But, we've seen inflows in lots of down market periods for IBIT. Here, this is a product that targets, as we talked about, a little bit more conservative investor base, more yield focused, like the fact that this slightly dampens the volatility of Bitcoin. And so I think for a lot, they'll see this as an opportunity.
To Scarlett's first question about, if you want certain things, there are other products from BlackRock that people can go and buy. The question I have is about what people sell in order to buy this. What does this replace in somebody's portfolio?
Yeah, well, most of the allocations that we're seeing in IBIT even, despite the extraordinary asset gathering pace that it's had, tend to be relatively small amounts of portfolios. We're not talking about people, selling 10, 15% of their positions to make room for this. We're talking about typically we would expect low single digits. And so it's going to vary. For some, it might be their existing Bitcoin exposure. For others, it may be gold, where they haven't been able to monetize yield on gold, and now they can actually do it through Bitcoin as this digital gold instrument. For others, it'll just be equities. For some, it'll be fixed income. So we think it's going to be a mix, which is frankly consistent with what we've seen on how people have funded new positions in IBIT as well.
You talk about how BITA will appeal to a more conservative investor who kind of has been eyeing Bitcoin, but maybe hasn't really gone forward with anything yet. How much overlap do you anticipate between holders of IBIT and this new BITA?
There'll be some. For example, I'll be one who takes advantage of this product. And long before we started with this idea, I experimented with how could I replicate something like this myself. And it's incredibly difficult as an individual investor to actually do that. So there'll be, I think, a bunch of new investors who this will be the first time they allocate to something with Bitcoin exposure. But there'll also be some that continue to hold some Bitcoin or some IBIT, but add this to generate a yield-producing component to their overall exposure.
What's maybe the next area of innovation? Like if we're talking to you in a year or two, what's the product that you're going to be telling us about that you're working on now?
Well, we've moved pretty slowly in terms of new product launches in this space, as you've seen, which is deliberate, right? So IBIT was extraordinarily successful. We launched that 2.5 years ago. And in the US, this is just the third additional product that we've done. We did the 2 Ether products, one with staking, one without. And now this. So we've taken a very discerning approach. We want to validate that something has very clear client demand before we do it, and that it's something that's going to, long-term be beneficial. So it'll be that continued slow, measured approach.
But when BlackRock does it, then it's hit the mainstream as well. Robbie, thank you so much. Robbie Mitchnick is BlackRock's global head of digital assets. Now, coming up next on Bloomberg Crypto, Binance telling customers in the EU that it could be shutting down services. Find out why and how soon the trading platform might have to pull the plug. This is Bloomberg Crypto. Binance could be shutting down its services in the European Union. The company notified customers in the region today that it may have to exit. Bloomberg's senior crypto editor, Ana Irera, has been following this story all day, and she joins us now from London. So, Ana, what's the story here? What's going on?
So according to new rules in Europe, fairly new rules called MiCA, firms that want to operate crypto businesses in the European Union need licenses. And they've had until July, the upcoming July, to get a license if you're an exchange. And Binance understands that it might not be able to get its license. It has been waiting for Greek regulators. They could have then passported the license across the European Union, they think they might not be getting it, and so they've told their users they might have to cease their services in the region. That would be a big deal because obviously Binance is the largest crypto exchange in the world and the largest operator of crypto exchanges in Europe as well. And so that would mean a significant shift for crypto markets in Europe.
But on a reasonable to think this is temporary until this regulatory issue is worked out?
So they have 2 weeks until the regulator can respond, and I believe regulators have a deadline. Once an application is set, they have to respond in a given time frame. So it seems like they've been trying to figure out what options they have, whether to go apply to another regulator. But according to rules, if they don't comply within, or they don't have a license within the deadline, then they might have to stop operations. Which then they're trying to also tell customers how to handle it, what options they would have as clients.
Binance's journey in Europe has not been totally smooth. Just kind of walk us through, the backdrop here as it faces this new challenge.
So it's not been smooth globally, I would say, right? We can remember in 2023, they had to settle with U.S. authorities over a money laundering case, and they had to pay a $4 billion fine. And in Europe, it sort of followed a similar trajectory. They were expanding aggressively. They were expanding their presence in France, and then they faced some investigations in France as well. And so they've had to sort of figure out where to apply. So, it's interesting to see as rules come into play who the winners will be. If you'll have traditional exchanges that had opted to have licenses early on, solidify their presence, or if you'll have some of these other exchanges who will be able to in the end acquire licenses. We also have some European-born crypto exchanges who might end up benefiting from this. We have some homegrown businesses who might get some of the clients if Binance has to leave.
A big thank you to Bloomberg's senior crypto editor, Ana Herrera, joining us from London. Now let's turn to the regulatory developments in the U.S. Nathan Dean with Bloomberg Intelligence writes this week, quote, Congress and U.S. regulatory agencies will likely embark on an agenda of clarifying the regulatory status of cryptocurrencies in the second half of the year, lowering enforcement risks for platforms, and building a foundation for institutional adoption of the sector. Nathan joins us now for today's political exchange. So what is on Congress and regulators' crypto agenda in the second half of this year?
So from the congressional perspective, it's getting the Clarity Act over the line, and we are definitely in go time here because, Congress only has a certain amount of days before they leave for the August recess. Now, when the Clarity Act passes, and look, I'm at a 70% chance I think it passes, it's then going to lead out and allow regulators to go actually develop what should crypto platforms actually operate under, give them regulatory clarity, and set the stage for them to actually grow without having the fear of an enforcement action over their neck.
All right, that's a lot of things to get through. I guess my question here is, the Senate calendar is very, very tight. There's a lot of work to do. Do you think, how does the Clarity Act fit in with all the other pressing priorities it has to move forward on?
Yeah, so, the Senate's only here for about 20 days before the August recess, and there are other things out there like the housing bill and FISA, et cetera, confirming Jay Clayton to be the acting director of national intelligence. So, there's a lot of people, can this get done before the 4th of July? I don't think so. I think if clarity passes, it's going to have to happen in mid-July. It's going to have to be very quick, and there are two issues that still need to be resolved. These are tied to ethics and provisions related to the Trump and family involvement of tokens, and also just whether or not crypto platforms should be advancing or working under KYC or AML systems, very similar to a bank. But at the end of the day, I think it can get done because these crypto platforms, they want a bill. If not, they are not going to be able to operate, past 2028. If a Democrat comes in and takes the presidency, those enforcement concerns come back.
So, Nathan, when the market's closed, we're off. When Congress is not in session, are you off?
We are always on. I mean, we're Bloomberg. But what I'll say here is that, when Congress is off, the regulatory actions keep on moving. The Office of the Comptroller of the Currency right now has a proposal out there implementing the Genius Act for stablecoins. And they actually went a little bit further in terms of their stablecoin yield restrictions than Congress had. And the crypto platforms, they don't like this. So the OCC is trying to finalize this by the end of the year. If Congress passes clarity, that should actually supersede what the OCC is doing, meaning this won't become an issue. But if Clarity Act doesn't pass and the OCC does propose it, it's going to be an issue.
Nathan Dean with Bloomberg Intelligence. He's always on in Washington. Make sure that you check out all of his recent research and his team's recent research on the terminal.
All right, that does it for Bloomberg Crypto this week. Join us again, same time, same place next week. Balance of Power's up next in Washington. This is Bloomberg.